Welcome, freshmen. Look, if you are running on like 3 hours of sleep and feeling completely overwhelmed by your early accounting classes right now, trust me, you are not alone. Today's review session is made entirely for you. We're going to take those abstract, super confusing rules and make them completely tangible. By the end of our time today, accounting is finally going to just click in your mind. So, let's jump right in.
Let's be honest for a second. Is memorizing the abstract rules of debits, credits, and trying to make sense of those giant, messy rooms of numbers kind of giving you a headache ahead of your midterms? Yeah, it's literally the most common pain point for new students. But what if I told you there's a ridiculously simple, physical way to visualize all of this data so you never, ever have to blindly memorize a formula again? Well, here is our roadmap for today. 1. The drawer metaphor. 2. Exploring the cash drawer. 3. Assets versus revenue. And 4. The double entry principle.
The drawer metaphor.
Okay, I want you to stop thinking of an accounting account as this complicated mathematical equation on a chalkboard. Instead, imagine a giant physical filing cabinet for the business. Inside this cabinet, every single accounting object, whether that's cash, inventory, debt, you name it, is just its own specific drawer. And here's the absolute secret to the whole system. Every drawer has a left side, which we call debit, and a right side, which we call credit. That is literally it. When you record a transaction, you're really just organizing numbers into the left or right side of a specific drawer.
Now, to stop our giant cabinet from turning into total chaos, the Ministry of Finance's Circular 99 kind of acts like a strict office manager, enforcing 4 rules. First up, a unique name and code, so you never accidentally mix up cash with inventory. Second, consistent recording. You only put the correct related items into that specific drawer. Third is continuity. Basically, whatever is left in the drawer at midnight on the last day of the month automatically becomes your starting point for the next month. And fourth, uniformity across all companies, just to make sure everybody is speaking the exact same financial language.
Section 2. Exploring the cash drawer.
We are going to zoom in on perhaps the single most important drawer for any business. The cash drawer. According to that naming rule we just talked about, this is officially known by its code, Account 111. This specific drawer tracks all physical Vietnamese dong cash receipts and payments at the cash fund. Let's use a real-world example from our source material to make sense of this. Ondu Young Company, a business in the trading sector. Imagine you're their lead accountant and you're standing right in front of drawer 111.
Let's actually see this in action over a given month for Ondoing. We start with a beginning balance of 50 million dong sitting right inside. That's on the debit side on the left. Over the month, money physically comes in, right? 30 million from sales and 20 million from a customer paying off their debt. We toss those into the left side, which increases the balance. But obviously, we also have bills to pay. So we reach into the right side, the credit side, and take out 2 million for office supplies, 15 million for workers' wages, and 10 million to settle a supplier debt. If you add up the left side and subtract what we took out on the right, you are left with a final ending balance of 73 million dong still sitting safely in the drawer. Makes sense, right?
Section 3. Assets versus revenue.
All right, grab your mental highlighters, because this is the exact spot where most freshmen get tripped up on exams. We need to carefully contrast 2 very distinct types of drawers here. On side A, we have asset accounts, just like our cash drawer, which are types 1 and 2. They increase on the debit side, decrease on the credit side, and crucially, they keep their ending balance at the end of the month. I mean, you wouldn't just throw your leftover cash in the trash, right? But look at side B, revenue accounts, type 5. These are fundamentally different. First off, they increase on the credit side, and here is the major difference. The revenue drawer must be completely emptied, literally dumped out to 0 on the debit side at the end of the period. Why? Because we have to sweep all that revenue into an income summary to figure out our net profit. That leaves the revenue drawer with absolutely no ending balance to start the next month.
Section 4. The double entry principle. So now let's step back and look at the whole cabinet. The golden rule of accounting is the dual balance principle, also known as double entry bookkeeping. It dictates that no transaction ever happens in isolation. Think about it. If you put something into the left side, the debit side, of one drawer, you absolutely must balance it out by putting an equal amount into the right side, the credit side, of another drawer. Every single time. Total debits must always equal total credits. This perfectly reflects where money comes from and what it's used for. It's actually been the foundation of accounting for over 500 years, dating all the way back to Luca Pacioli, and it's your ultimate safeguard to check if your records are actually accurate.
So how do we actually apply this without totally panicking during a midterm? Well, just use this foolproof 4-step process. Step 1, identify. Which specific drawers are opening? Step 2, classify. Are they assets, liabilities, or revenue? Step 3, direction. Is the cash or value going up or going down? And step 4, record. Log the debit and credit and verify they balance perfectly. If you just stick to these 4 steps, journal entries are going to become second nature in no time.
Okay, we have covered a massive amount of ground today, and you've done a really fantastic job staying focused. But I want to leave you with this final, provocative case study question to test your new knowledge right now. If your company buys inventory but hasn't actually paid the supplier yet, which 2 drawers are you opening in your cabinet? Think about the 4 steps we literally just discussed. I really hope this review session has helped like those abstract accounting rules finally feel real and manageable for you. Good luck applying this newfound clarity to your upcoming tests, and hey, keep practicing with those drawers.